Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So, a bit of a crazy day, very choppy, but a downside biased, which is the bias the market's had for the past, I would say, 4 weeks or so, or even more recently, the last 2 weeks. We talk about when composure changes, when you're in some type of trend, and obviously it's been to the downside, but there's a lot of trades that happen intraday. There are a lot of trades and setups that tactically can take place if you use your proper rule system and you don't overtrade and you don't take too much size. You know, we came in today knowing a few things. We knew that yesterday's low was 1336 on the S&P, so that was your area to trade long against. And then we also knew what's been the recent support that turns into resistance, which is at 1343, which we couldn't get back above. And then obviously there were levels underneath, and we knew what to watch, whether to see if the complexion to the downside can accelerate, or do we just drip lower the way we've been dripping. And as far as macro levels, we've talked about micro levels along the way during this correction. We're now getting a little bit closer to what I think could be more compelling macro levels that we've spoken about. About 2 weeks ago, guys love when I say 75% chance. Well, I said there's a 75% chance we see 1320. We went as low as 1328 today. And the measured move of that head and shoulders top pattern is around 1295 to 1305. So we're getting close. And as you get close to levels or to tail ends of moves, they get very choppy. Same way when you have a nice long bull market, the last 3 innings tend to be a little bit choppy. Same way, not saying we're in the last 3 innings of this down move, but we could be close. So you get people trying to buy dips that don't work, and then you get people who are short that aren't committed, that get squeezed around. But overall, typically we get to the spot mapped out. And if you look at the chart of the S&P, you will see that here is the macro pattern, here's the macro head and shoulders pattern, here's your left shoulder, here's your head, here's your right shoulder, here is this uptrend that was broken, way back when. It was broken right around this April area, and then we retested and made a lower high. And then really this was the most recent tradable or actionable macro pivot point. When we broke below 1390 when I was away, and on that claims number that Thursday, that was your signal to get out of the way, get out of loose longs, which you saw leave my virtual trade floor. If I was here, I probably would have went short there, but I didn't. But you actually had another day on the jobless number, where we bounced around to get out of the rest, and then all of a sudden now you have this defined neckline. Right, remember this 1340 area? It was a nice angle here. Once we broke below this 1360, it was somewhat game on. But from 1390 down to 1360, it was a little hard just to accelerate lower. So you came down, we held right around here, retested this 1360, could never get back above. So there's your retest. And then since then, we've traded lower to the downside, whereas now the low of today was 1328. Right near my compelling 1320, which is the Fibonacci retracement that we talked about. And then here is your 1300, which would be the measured move of about 1420 to the neckline of 1360. That takes you down to about 1300. So for this last stage of this move, it could either happen fast, it could happen slow. It all depends. And recently it's been very slow, where our oscillators have not been able to get oversold enough to hold a stock or a situation for more than a few hours. So today, over the top of my head, I think the level on the spiders was 133.91. That was the level that I knew was the low from yesterday. So we opened above it, played around with it, and I wanted to show you a pattern that Laz uses called the H pattern, where after you're oversold, you bounce, and then you roll over, and then you use your price points for entries for continuation. So if you go to the 5-minute chart, you'll see here on just say the S&P, here was the open. Okay, we opened right around the previous low, which was let's go to the spiders, because a lot of guys trade the spiders, so we might as well go with that. So let's move this up so you can see it. Here you go. Move it higher. Okay, so definitely a choppy day. Okay, and they definitely pushed the envelope both ways. If you look, we rallied up and we made a lower high from here. Okay, then we came down and we broke through, which was very tricky. Remember this? Here, let's get this a little higher so you can see this here, your little Quotron. We broke through this low here of 133.95, which was like yesterday's low. Here's 133, okay, 133.94, so I was off by 3 cents. And definitely got people out because I was long. If you guys remember, I was on the spiders. I covered my Apple. I was long a little LVS. I was long a little JP Morgan. I sold some into there, but my trailers I got stopped all out of when this happened. So to me, I was like, you know what? I'm going to step away. Some guys actually, once we reclaimed this area, 134, said I'm going to go long versus low. So the morning low was then 130. What was this? 133.84. So right there, you have a 10-cent stop. That's all they can muster to the downside for what wound up being a decent move to the upside, as high as almost 134.80. So, decent micro trade to the upside. And guys who were short probably got squeezed out right here. And I'm not saying it's an easy environment because it pushed through the prior high. So at that particular point, who knew where it can go? Maybe it could have went to the 135.05, or maybe it could have tried to fill this gap. You didn't know. So the right thing to do was to cover there. Okay, but if you covered there and you kind of left your emotions at the doorway, you then had to move lower back to the lows. And then you have a high, lower high, lower high. I went back on the radio. Okay, I was talking right around here saying things are looking weaker. It feels like we're going to roll over. At this point, I was a little frustrated with Apple. I was frustrated with a few things, but I said, I'm going to go back to it. So I shorted this 134 area. I said, I know I'm going to be shorting the low here of 133.84. So at least let me get a head start and short this 134.40. I mean, it was 134 because, again, it's good to have a little bit of room just in case you're right. So I shorted here. We started breaking below this level. So if you want to, go across here, I added right there. So if people want to use a tier system or talk about it, I was in tier 1 and change at 134. We started breaking below this. I pretty much hit the bid, and I was probably short tier 3 right here. And then quickly, to be comfortable, there was a nice little bar down to like 133.60s. At that point, I went back to like tier 1.5 just to be comfortable, book a nice 40 cents trade right there after being frustrated throughout the most course of the day. And then, as we just traded lower, I said I'm going to cover along the way. And by the time we went down to the low of 133.13, I think I covered the rest of it right around here, around 133.30. I wasn't perfect, but that was a nice trade from, from the 2:30 time period all the way to the end of the day. So I revisited it again, even though I had a little tough day being chopped around, but rightly so, at least we were safe. So this was a nice trade for people, okay? And it was calculated. Here's like your H pattern, where you had a downside push, it kind of like rolled over and then traded through the support here. And if you were at least long here, you had to calculate it out. So with that said, that was your spider trade. Another focus of mine was Apple. Funny thing is, if you look at the chart of Apple, you would say, Red Dog, why did you cover it all? The stock never violated any previous macro levels. Why were you so tight? And I ask myself sometimes afterwards, I'm like, wow, I look at this now. I should never have covered anything. But again, Apple could drive you a little crazy. Because if you look here at, let's go to the macro pattern of Apple, doesn't look like much pain here, right? If you take even a broader look here, Apple has been acting very well technically, from a bearish side, from a bull or bear side. Remember when we had the first stop here at 622, market was making highs or trying to make new highs and Apple wouldn't go, and then pow. Then all of a sudden, they gapped up on earnings, really held none of the earnings gap, but showed you weakness. Then we came down, retested this area, little bounce, nothing great at all, showed you the market couldn't buy any strength. And then today, yesterday's high was 567.50, okay? That was yesterday's high. I went home short Apple, and really, the stop should have been above this area, okay? And I guess I overtraded it. The high here today was what, 563.22. Not even $3 below it, okay? So anyway, I did get stopped out, but the old Red Dog would have said, you know what? I'm done with it. It got me. It's too difficult. Or I would, the new Red Dog says, you know what? Friday the stock was at 570, 574. Maybe needs a little bit more time to break below yesterday's low or 555. Revisit the trade. Apple doesn't know that yesterday it was choppy. Apple doesn't know that this morning I came in, short overnight and I got stopped out of a lot of it around 562. So with that said, Trade wasn't a great trade, but at least I made my money back there and I stayed with it. So if you look here, you will see that it traded below this 557.60, okay, went through your 555, and it closed at the low. It closed around 553, a little bit off the low. So working its way lower. It now filled this gap. I covered some into this gap. This is what I was talking about. I think I even mentioned it on Twitter. The high here was 552. So sometimes stocks like to fill gaps, and then they find some kind of support. So it filled that, didn't really bounce that hard off of it. Next level here is, you'll say 547, which I think we could see tomorrow pretty easily. We get one push through today's low tomorrow, you're going to be seeing this, which is a spot to probably cover a little bit more, and then the 100 days at 524. And I really see no reason why, it shouldn't retest this area. I think guys could now use this 555 to 558 as a stop if you're really tight, and then obviously I think the real stop's right there. But anyway, you go to your 3-minute chart, you'll see the same type of thing where you did have a nice trade in the afternoon, okay? You take this out of the way, and obviously this was very choppy, okay? It tried trading down. At least I gave you a way out of it. I added and I added and then power. But look where it went to, guys. Went to yesterday's area of congestion. So that was resistance, and it couldn't obviously get through it. Here, went back up there. Definitely was tough to hold, and I was actually stopped out there also. But then just like the futures, high, lower, high, lower, high. So this is when I said, you know what, I have to revisit this trade. I can't not be in it if it's going to work. So with that said, I knew my areas. Okay, I said first, if we break 559, have a little bit. So I had a little bit there. And then once you broke this 557, the morning low, here was another entry. Okay, and then it gave you a clean move down to 555 where it hovered, and this was your third entry. So here would be like tier 1, tier 2, cover a little bit into the 555, see how it acts, and then if it looks like it's still weak, which it was, you add back, and then you cover some into the 552, and you hold some, because that's where we bounced off of. So now tomorrow, maybe I would say this would be a decent area to know this 557, which was yesterday's low. So this stock, if the futures open up, should be reshortable into this area, and if they want to push the envelope, probably into 559, and then for a continuation below today's low for a move that could be, down to this 547, and then all the way into bigger support. But that, that's Apple. As far as some of the financials, J.P. Morgan, Jamie Dimon came out. It was press conference or shareholders meeting. It bounced around. It wasn't great. There was some longs, there was some shorts. It all depends on how you look at it. I don't want to look at it too closely, but I would say at this point, it did push through this prior pivot and failed. We have a few points of reference to trade against. I'd say, being it light, trade versus the low here of 35.76. It closed above it, and it's probably going to need some time to trade in this lower range. Okay, I think guys made some money trading Goldman Sachs because it filled this gap, but this is micro trading. This is all you get. Okay, guys were saying, oh, what do you think about Goldman? What do you think? I was like, you know what? As a micro trade, it probably fills a gap, which it did. It traded above this level of 101.07, filled the gap here. Okay, on a micro level, this gap was 101.59, went as high as 101.77, and that's all there was. That's it. If you look at it from a day trading standpoint, it was decent. Okay, right? This is a decent setup from a day trading standpoint, right? It gapped up, okay, went sideways, was really, really, really tight. This is just tactical trading. Take your trades and run. Don't look for anything. Gap up, sideways, sideways, sideways. Traded above this 101.16 and gave you a 50-cent trade. And I know it's trading for nickels, quarters, whatever, but you have to take what you can get, and that's what Goldman Sachs gave you today. You look at it on the 8-minute chart, and you can see it a little bit clearer, right? Here is the gap from yesterday. So here was the open, which was higher than yesterday's low. So it showed you a little bit of relative strength. It made a quick move above yesterday's congestion, right? And if you look like this, it powered through. So it showed you a little power here. It showed you, what, this is in the game for some kind of reflex, something or other. Tight, 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 tight in the top third of this range, and then it broke above it, and you really almost had to be perfect and say, you know what, I'm just going to get out of this when it comes close to filling this gap, and it almost filled the entire thing, and that was a trade, and that's a tactical trade within this market, and that's all you're really getting unless you're just leaning short, and you have to have a little risk tolerance for that. The FXC still on its way down, and rightly so. If you look here on the daily chart, it's just, remember this pattern here, this pennant type pattern where it was constricting into constricting. Well, there was some talk. It looked like it was going to break to the upside, and it didn't. Failed, and then once it broke this level here, this was a big level in the FXC. We'll put that up there so you could see it. It wound up 129.65. That was your get out of Dodge, and now it's trading, right near the pivot of the date here is January 13th. Gold obviously is following along. When you have the euro going down, the dollar's going up, and then you're getting your pressure on commodities, and this has been broken. I know I tried it a few times, for this breaking of this intermediate trend, but it was nothing more than a trade, and I actually didn't really lose that much trying it. Obviously I probably should have been shorting into that, but wasn't my trade. And now at this particular point, it's coming in, closing the lows near the pivot point of 1229, which was 148.27, and that's your point of reference coming in right here. If it breaks below this, next real level is like 140. So at this point, just take care. A lot of people have been confused with gold, and I typically have a good handle on gold, but to me, gold lost its identity this year. I don't know what it is. In the past few years, you had it as an inflation trade, you had it as a safety trade, you had it as a mid, the uprising in Egypt and whatnot, and technically there were a lot of patterns there that I traded from 2008 all the way through. And then when you had this top here, if you go back to this outside day, this was the top in gold right around 1920, and since then it's acted pretty poorly. It's been in a macro downtrend. Okay, here's a high, lower high, double top. Okay, but then Fed day, pow, potent, engulfed this whole situation, intermediate downtrend, and now we're coming right into a big level. And obviously it's tough to short gold now, 19 or 20% off the highs, but it doesn't necessarily mean you could buy it, because if you go here and you look at the more macro trend and you go to your monthly chart of GLD, you'll see it's just really starting to fail. I know Vicky put this in off the charts. If you go from here, you have a little wedge right pattern. This is a wedge, and it seems like it's breaking it to the downside, coming into support. And again, next real level here is 140 on the monthly chart. So if you're holding your nose and going underwater with gold and GLD, just know, look at the size of the move that it's had since 2005. It broke this trend from here. I guess if you want to do a smoother trend from 2005 when it started, that takes you really to 140. So there you go. So just don't be a gold bug, because if you are, you're probably bugging out because you're not following your rules. Same way everyone said all these Facebook stocks would be a lot higher going into Facebook. They chose to run the last 2 days, not 4 weeks ago. This morning in Morning Call, we said, I think 14 would be a decent spot to sell Groupon. Look at Groupon. It just shows you your pricing and your timing. This was a decent igniting bar yesterday because people were scared, saying, who knows if maybe Groupon will be good. Look where it was the last quarter. Remember how we tried to play it then? This actually was a good trade then. I remember trying to play for this downtrend move. But just to show you something here, remember this trade, this breakout trade? If you remember the site, you saw that. Then you had your doji. When things break out and come back that quickly, this, if it was any good, probably should have held higher and continued, but it came right back into the base. That's a faulty breakout that shows you that you got to get out of the way. Then obviously, here was big support that it broke below. And then today, if you took it into earnings, you took some risk, and hopefully you sold the open because it closed a lot near the lows. And I know guys that got to borrow were able to make money short there. And the Zynga trade got 2 days. Again, if you look at this chart and you take the word Zynga out of the way, it was a screaming sell right here. Right? What is that, guys? In technical land, this is a shooting star top. It's a red dog reversal. It's an outside day. Actually, not a red dog reversal. Probably would have had a trade through here. But anyway, sell signal, or a day to take notice to see what it leads to. And what it led to was a move lower, never got back above. And then you look at this somewhat of a wedge pattern, and then pow. If you didn't get out there, I know a lot of right around here, guys like, oh, I don't want to sell 11. Everyone's saying that it's going to go to 20 by Facebook. Okay, if everyone's saying it, obviously be a bit skeptical. So anyway, you have this very tight descending channel here. It broke above. Today is what, Tuesday? Or is it today Wednesday? Tuesday. So maybe gets a little bit more upside action going into Facebook. This would be a level pretty hard for it to get through. This is your 950. And then I guess if there's crazy excitement, maybe to retest this, but I doubt it happens too soon. So all in all, you have to either really be a micro scalper or looking for really short-term tactical trades, or you have to be sticking with your macro long-term views if you've had these for years, because again, we're still only about 6% off the highs. Or we're in this corrective phase and you're like, okay, Red Dog says 1320, 75%. I'm going to short every rally. I have the pain tolerance. I'll cover there and then look to see if I could buy when the measured move is met of that 1295 to 1305. But that takes wherewithal, that takes staying power, and that takes risk. So figure out where you are within that 3 pendulum stratosphere, and then you'll be okay. Don't get out of your comfort zone too quick, because you won't be able to handle it and you'll wind up losing money. And again, like today, most of the day was choppy, hard to deal with, and then finally around 2:30, you had a decent sell setup. And if you just take the setup that's there, that's very compelling, and not trade the noise, you'll save yourself a lot of aggravation and you'll probably make more money. This has been Scott Redler, T3 Live, the recap. See you at the morning call. Have a good night.